Let's start tonight in South Africa. That country's growth forecast has been revised downwards yet again to just 0.5% for all of 2016, and that's lower than the 0.9% figure we saw earlier in the year. The Finance Minister, Pravin Gordhan, made the announcement in Parliament on Wednesday when he delivered the medium-term budget statement. Now, this mid-term policy document sets out the government's spending priorities over a 3-year horizon. The South African growth story has been pretty dismal over the last couple of years. In fact, it's been in decline. Tax revenues have also fallen, and unemployment and poverty in the meantime have gone up. Here's Sumitra Nydoo now taking a look at how this budget is being planned out.
Preparing the midterm budget was no easy task for the finance minister and his team. In a press briefing ahead of the budget, the minister noted that South Africa is undergoing a difficult economic transition.
The economic environment in which we find ourselves, and quite clearly both globally and in our own context, let alone the African context, the economic environment is a challenging one, but not an impossible one.
The economy is showing signs of a recovery. Electricity generation has improved, tourism numbers are up, and agriculture is expected to recover as drought conditions recede.
We have made good progress in the last 9 months. We intend to build on that good progress and ensure that all of the issues, both fiscal and expenditure related, can be managed in the right kind of way. We are not in a hopeless situation. We do see growth of 0.5%, as you saw in this year. It could get to 1.7% next year. It could get even better than that, provided that we do the things we need to do, both as government and as society.
The Fees Must Fall protest received considerable attention. Ministers handling the issue were called in to assure students that the matter is receiving urgent attention. While there was widespread expectation that university fee increases would be scrapped for 2017, there was no provision in the budget. Government will instead fund fee increases up to a maximum of 8% for students from low-income families.
Public expenditure on post-school education and training has in fact grown considerably faster than any other budget allocation in recent years, and this will continue. At the heart of the issue is that access has expanded faster than resources. As a result, many students face financial hardships that undermine their ability to succeed academically.
Political uncertainty has added to the concerns of a protracted low-growth economy. The minister warned that if this persisted, it would have dire consequences on confidence levels and the overall economy. The finance minister refused to be drawn on the 4 charges he is facing, opting to speak about it at a later stage. But for many, this felt like no ordinary medium-term budget speech, as it was filled with innuendos and subtle warnings for the various political forces. In terms of the numbers, the finance minister was realistic about the challenges South Africa is facing, but noted that much progress has been made in recent months. It's still unclear whether it will be enough to stave off a ratings downgrade in December. Sumitra Nydoo, CCTV, Cape Town, South Africa.
All right, then let's see exactly what the markets made of that particular budget speech today. Lesibo Motata is the Chief Economist at Investment Solutions, is live with me right now from Johannesburg. Thank you for your time. What did you make of Minister Gordhan's pledge for a measured, as he put it, a measured approach to spending cuts? Does it go far enough to clean up public finances?
Yeah, indeed, the minister has confirmed that while there were concerns leading into this budget, whether there will be a shift away from prudent fiscal management, he has demonstrated that the SA continue on that path, and he has introduced now in the 3rd year lower expenditure plans. Although there's newest contributions towards education, broadly speaking, there is a cap in terms of how much is going to be spent in the next 3 years, which all in all suggests that I think SA remains well intact around fiscal prudence, fiscal austerity to some degree, and also an outcome which I think rating agencies will take heart on.
Indeed. The minister also emphasized the need to end what he described as political noise and start rebuilding badly damaged confidence in the government. But the ANC seemed to just lurch from one crisis to the next. Can it actually pull a recovery and get out of this rut in the next 12 months?
It was very encouraging. It was very heartwarming to see the minister who delivered a stately, a presidential, strong leadership budget amidst concerns and machinations at that leadership of that institutions. Political contributions continue. There are concerns around that, but if you just look at the architecture of that institution, it suggests that fiscal prudence remains, debt consolidation is intact, which the numbers, the hard statistics that which rating agencies look at, when they look at them, they will find that there's actually very little changed from where we've been in February when the budget was put out and also for the last 2 decades.
Well, let's talk about the timing of the next round of foreign currency borrowing. Given the odds of a US rate hike sooner rather than later, what's the ideal window for South Africa to come to the market, and what sort of price should the country expect to pay?
Very interesting question, because it's only in the last, say, month that South Africa they went to capital markets and they issued about $3 billion at cheaper interests than we have seen in April when they issued that $1.25 billion. The markets, capital markets, are demanding high-yielding assets like those of South Africa, along with other countries as seen in the Saudi Arabian outcome, which is about a week ago. There's just a huge demand for such, and with improved outcomes in terms of economic growth, and I think with rating agencies likely to look at this budget favorably, it creates a path for South Africa to actually tap into financial markets, particularly global one, where we have seen strong demand. That issuance that was about a month ago was oversubscribed with lower interests.
Indeed. We'll leave it there for the time being. Thank you for your insights as always. Lesiba Motata there in Johannesburg, South Africa from Investment Solutions.